Argentina has elected a new president. The libertarian Javier Milei won a second-round runoff vote on Sunday with about 56% of the vote. Now he has the task of turning the country's economy around amid 143% inflation, foreign currency reserves, in the red, and a looming recession. One of his pledges to fix the situation is ditching the peso, shutting down the central bank, and committing to dollarization. Argentina's peso has been hit with a crisis and recession that has sunk its value and left it with a wide array of exchange rates. Milei and his advisors see turning to the U.S. dollar as a way to stabilize the economy and the country. Meanwhile, the U.S. dollar is extending losses, the greenback sliding to a more than 2-month low, as traders believe that monetary tightening is over and are now focused on the Fed cutting rates. As the dollar falls, some investors will be looking for opportunities in emerging markets. So here with the details on some EM trends is our very own Jared Blickery. Hey, Jared.
Hey, Brad, you nailed it. It's all about what the Fed is doing. In my last hit an hour ago, I was talking about interest rate differentials. When you have a really strong currency like the United States and you have higher interest rates than just about the entire world, people are going to rush into your currency, and that's going to push the value of the dollar up and others down. But at this stage in the business cycle, markets are forward-looking. They're looking to the Fed increasingly being seen as being on hold. So if the Fed isn't going to raise rates anymore, no need to scramble into the U.S. dollar. Therefore, this is the time of the business cycle when emerging markets can potentially flourish. But first, before I get into some of the indices around the world, I want to focus on currencies first. This is the U.S. dollar versus a bunch of pairs around the world. And we're just talking about Argentina. Well, the U.S. dollar is up 100.1% versus the Argentine peso. Just think about that. That is an incredible rate. That means the value of their currency is just about halved in this very short time period. That's not even 1 year. If you take a look over the last 5 years, 884%. That is not something that bodes well for anybody who's borrowing in U.S. dollars down there. But back to the main point, the U.S. dollar has been strong for the year, but it has fallen off in the last few days. Let's take a look at a 1-month view, and you can see there's a lot more red here than there is green. That means that the dollar weakening is now a tailwind for stocks. Now, let's get to some of the some of the index action here. Just one more screen, and there we go. We're going to see if I can pull this up. Oh, it doesn't want to cooperate. We'll have to see. There we go. Sorry about that, guys. Here we go. We have the indexes that I was looking for. Year to date, we see over 1 month to date, we see the Bovespa, that's Brazil, that has benefited the most from the dollar weakening over the last month. Then we have the NASDAQ that's been up another 9% after flagging for a few months. We got Spain, we got Germany, all of those outperforming the S&P 500. So this really has been a time potentially for that shining. And just on a year-to-date basis, you can really see the outperformance still of the U.S. NASDAQ Composite up 35%, Nikkei up 28%. Pretty large differential there from a lot of these other indices. For instance, the Hang Seng, which is down 10%. China, sometimes considered still an emerging market. That's debatable, but it has definitely had some of the worst problems this year.
All right, Jared, thanks so much for the deep dive here in terms of what we're seeing play out from around the world.